Stock Market Morning Prep video for Tuesday, October 28th. Really, no change in the market. Very, very quiet. That's like the calm before the storm, if you know what I mean. I showed you yesterday about the Bollinger Bands, how they're tightening on a 30-minute. I'll show them to you again, and that's exactly what it seems to be happening, that we're ready to vacate the area, just we don't know exactly where. So we're going to go run through the analysis through the indexes again, keep it really simple and light. There really has not been any change, but I just wanted to go through them one more time just to see where we are here. Dow Jones is up about 12 and a half, Nasdaq up 2 and a quarter, S&P down almost 3 points, and a Russell down $1.35. So very, very choppy price action, extremely light volume. Really not much to do yesterday at all. So let's dive in and see what we have on the spiders on the daily chart. As you can see here, we are still in the inside day from Monday. Really haven't gone anywhere. Underneath the 50-day moving average, still underneath the 78.6% retracement, but above the 61.8% retracement. So we're still kind of in that sweet spot. What's nerve-wracking here is if you're a bull, should be volume. There is absolutely no volume on this move up. That's not a good sign. However, we do have some movement in the stochastics and the MACD. MACD nicely, histograms making higher highs and higher lows as well. One thing, let's take a look at the volume zones here to the left. Nice indication of where supply and demand is. Once you break back above here, if we take back this 78.6% retracement, you can see we really have very light, thin zones that are in this area, which could easily flush right to the upside. However, if you look to the downside, and if we take out, let's just call it 61.8% retracement, well, guess what? We have a lot of room to run to the downside because we have extremely light zone areas here where we have these thin zones that are coming in that would take us right back to the 186.65 in the spiders. So we can easily just suck right down to the bottom here. That's what it's like a vacuum. It'll just take it right in because there really is no real support here. Okay, so that's something that you want to pay attention to either way, to the upside end or to the downside. So just keep an eye on that. If that did happen, even if, let's say, for all argument's sake here, we sell off to the 186.65. That's still a higher low from this previous low here, that local low that's been made. So that's not a bad thing if it does get to this corner here and then starts to rally and could support itself in this area because of the zone area here. So keep an eye on this. The volume zones are really, really good to use. I like using them on a daily chart for my analysis, for the daily analysis. Okay, so take a look at that 30-minute. As you can see, and I showed it to you all the time, Bollinger Bands pinch, boom, they either break up or down. Unfortunately, they don't tell you which way it wants to break. But as you can see, we're making higher highs and higher lows, so you would suspect that the markets are going to break higher, but that does not necessarily have to happen. But it's a nice area. We have really 3 days of really going nowhere. So we had Thursday, Friday, and Monday, which was yesterday, really going nowhere on light volume. So this is, to me, is ready. Looks like seems to be ready to vacate the area. We are getting closer to the end of the month, where markets historically like to stabilize coming off of a volatile October. Okay, and when that happens, usually puts in a bottom in place for the end of the year. Now, with no geopolitical event risk that's really in the headlines. We know it's out there, but without being on the headlines and relatively quiet, who knows, the market may bounce and start to rally again. Okay, but this time we want to see volume. So we did have a nice 3-day base here on the 30-minute chart. So let's see if this thing could break a little higher here and at least challenge the highs. That's not out of the question at all. All right, diamonds. We had a little, you could obviously call it an outside day because we did break break Friday's high, but really barely. So I'm going to just take that with a grain of salt. As you can see, volume is extremely light, lighter than Friday's close. Again, this is the culprit. What I don't like. This is actually a short seller's dream here. If this fails, remember, we don't want to be looking to short anything. This is the sweet spot here, but it needs to take out yesterday's low. All right, 166.90 in the diamonds. And again, look at these volume profiles. Scary, because if this thing does break down from here, I mean, you could have an easily big flush to the downside, right down to this areas here. So keep an eye on things. Let's see what happens. Again, that 23% right up in this area, this little cluster here. Let's see if it tags this area down here. It still makes that higher low. So that's a good bull case. Okay. take a look at the transports. Now, the transports are showing a different picture. Transports are literally on fire. You could see this back up again, blew right through the 78.6% retracement, and now challenging the highs again. So let's see what happens here. But this is telling me that the markets want to go higher if you get the transports moving higher. Now, again, one index doesn't necessarily take everything else, but you have a couple of the indexes that are moving quite well, and that's also technology. So when you have technology, you have the transports moving higher. That's two of the leaders. Russell is lagging, obviously, but if you have that, then you could see, possibly the other indices start to follow suit here. IWM, you could see lagging just below the 61.8%, below the 50-day moving average. And again, this thin zone, keep an eye on this because we can easily flush to the downside, and if not, break down. If the Russell does break down, then I do suspect the markets are in trouble because if the Russell can't, small caps can't stabilize and at least hold above this 20. And as you can see, the 20 moving average is kind of flatline here because we're just stabilizing now and we're kind of making this little zone. So if you could see real simple, if you just draw a simple trend line and you have this little horizontal channel that it's in, right above the 61, above the 38 and a half. But just below the 50%. So we're sitting right in this channel. So we're going to need to break out, and let's see what happens here. But again, you have this little volume area here of supply that we have some nice little overhead resistance need to break out above. But once we take this out, then I do suspect that the IWMs would go higher. Now, if you're a bull, you want to see this Russell start to rally. If the Russell rallies, like it actually rallied a little bit this morning, it paid a lot of its losses. I mean, the Russell at one point was down, the Russell index down to like right around 1105, and it rallied up to about 1120, recovered most of his losses. So that's actually a good sign that buyers at dips are starting to step in. Okay. Now we have lastly the Qs, as you can see, 78.6% retracement, and pretty much blue skies ahead if it takes out the high here. I mean, pretty much. But as you can see, it's come a long way, real far, real fast. It's about 6 trading days, maybe 8 trading days on absolutely no volume. That's the scary part. Okay, let's keep that in perspective when you're trading. Again, if you're day trading, a little different, but you want to be aware of what the indices are doing, or at least look like what it wants to do. And if you are a position trader, swing trader, long-term investor, I don't think you want to be adding at these areas, at least not now. Let's get another dip if it does come into play and make that higher low from the previous low, and then start to base, and then start to move higher. Then it'd be safe to come out of the waters and start looking to nibble into the long position. Okay, have a great day, everybody, and we'll see you tomorrow.